Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to briefly talk about the current situation with Algonquin Power and Utilities stock. I published a video about Algonquin Power almost 8 months ago and analyzed their stock in detail. In that video, I discussed the risk associated with investing in this company. This is a short clip from my Algonquin Power stock analysis video. There are some risks associated with Algonquin Power, and the most important one is the balance sheet risk. In the last 2 years, the free cash flow of the company was actually negative, and they spent almost all of their operating cash flow for paying out the dividend. Even the management clearly mentioned that they want to pay out 80 to 90% of their adjusted earnings to shareholders as dividends, which means they have little to no money left to reinvest in themselves in the future, and the only way for them to grow is using debt. And we know the interest rates are rising in the future, which can make their business much less profitable. As I mentioned in that video, and as expected, rising interest rate environment is not good for a debt-heavy business like AQN, and interest payments are eating into their profit. It's not only that, AQN diluting shareholders like there is no tomorrow. I mean, they diluted you as investors by almost 100% in the last 3 years, which is crazy to even think about. It means if there were, for example, 1,000 shares of AQN on the market 3 years ago, today there are 2,000 shares of AQN available, and your ownership in the company decreased by 50%. On top of that, the free cash flow of the company did not grow by much. It was actually negative in the last few quarters, and the actual debt are also increasing very fast. I understand utility companies are usually debt heavy, but the debt and share dilution here is on another level. They are basically reducing the value of money you invest in the company by diluting shareholders left and right, taking on new long-term debts, and increasing the debt in the balance sheet at the same time, and also not growing the cash flow fast enough because their investment in new asset has not been paid off yet. At the time of publishing that video, AQN stock price was around $19 per share, and I discussed the valuation of the company and concluded that the stock was overpriced and overvalued by almost 50%. Just see a short video clip from valuation of AQN. If I expect a 10% return from this company, the fair value of the stock is almost 10 Canadian dollar, which means compared to the current share price of 18.7, the shares are traded at 47% premium, and it is not a buy according to the model. A lot of people called me crazy at the time and told me I don't get it, and these numbers are just wrong, and disregarded the valuation and risk of the stock, and because it was renewable, it was utility, and the stock price was just going up in the previous years, then they bought into the company. AQN reported their quarterly earnings on Friday, and this earnings report was a complete disaster. And the shares of AQN dropped another 20% after this earnings report to $12 per share due to their problems with interest rate hikes and covering the interest payments, and therefore less profit for the business. Unfortunately, I still see some investors in AQN rush to buy the dip, thinking this is the best investment opportunity in their lifetime. The stock currently has a dividend yield of almost 7.5%. On paper, this company seems like an ideal candidate for portfolios of passive income investors. Even if the share price doesn't move that much, 7.5% return as dividend is enough to have the average return of S&P 500, and you can do so via passive income, which sounds very sweet. You don't even need capital appreciation that much. Just the dividends are enough to almost beat the market. Unfortunately, I have to disagree here. I think investing in AQN right now is an extremely risky move. There is a good chance that they have to cut the dividend to be able to continue their operations, and you may very well lose more money. The risk-reward profile here is not interesting in my opinion. You are taking on a huge risk for a very limited upside. In the best case scenario, AQN is able to come out from this mess and continue to pay the dividend. In that case, your return is similar to the market, maybe a slightly better. I mean, in the best case, your return would be something like between 8 to 12% average year over year in the next 10 years. In worst case scenario, they will cut the dividend and you will end up holding the bag. This is the definition of a high risk, low reward investment, which is exactly the opposite of what you need to do in investing. Yes, they may be able to continue to pay the dividend if interest rates decrease in the near future, or if they can cut the cost of the business somewhere else. But there is a very good chance that they cannot do so. And in investing, you always need to look at the both risks and rewards of an investment opportunity. Looking only at the bull case and potential rewards is the wrong way of making decisions in investing. That's why I always talk about risk-reward profile with stocks. Just look at these numbers. The company debt is increasing year over year by very fast pace. They're diluting you as shareholder by issuing new shares. Share dilution by itself is not a reason to dislike a company, but the rate of dilution in AQN is really aggressive, while they cannot show much cash flow growth with all this dilution. In addition, raising interest rate environment caused them to pay more and more interest on their massive debts, and now the free cash flow of the company may not be enough to pay the dividend itself. What would be the most reasonable solution if you were the CEO of the company? Of course, reducing the operation costs, maybe trying to pay down the debts, maybe diluting shareholders more to raise capital. And if these measures are not enough, then you have to cut the dividend. If they do cut the dividend, does that mean it is the end of the world? Of course not. Lots of companies cut the dividend due to various reasons. However, it means you probably overpaid for the business when you invested your money in this company in the past. I'm not saying they will cut the dividend for sure, but there is a good chance for this to happen when I look at these numbers. Anyway, I just wanted to send this message to AQN investors and wish every single one of you good luck in your investment journey. At the end of the day, you should do your own research and make decisions which are best for you. You know your own risk tolerance better than me, and you may do some basic risks here and actually be able to make good money on AQN at this level if they can turn this around. But if you ask me, I would not invest my own money in a high risk, low reward situation like this one. There you are, guys. I hope you enjoyed the video. I will come back with a new stock analysis video soon. But until that time, I see you guys in the next video. Farewell.